So commodities, they're still cheap. I mean, silver is still down over 50% from its all-time high. Sugar's a disaster on a long-term basis. So if you can figure out commodities, they may be cheap. And normally, if you have a lot of money printing, which we have had and are having, owning real assets is the way to at least protect yourself and maybe even get rich. So all I can suggest from new investors, if they're worrying about 10 years from now, is learn about sugar, learn about silver, learn about things
Coffee.
that are cheap, that are depressed, and maybe you'll make some money.
In 2022, we noticed how a strong rise in the US dollar and consequently big decline in inflation expectations broke the secular breakout in silver that started in first quarter. However, the Silver Cot report continued to improve to the extent that it became historically bullish in Q3. JimRogers is a prominent figure in the finance world and co-founder of the renowned Quantum Fund and Soros Fund Management. In this video, JimRogers predicts a positive future for commodities, including silver, which has the potential to offer wealth-building opportunities. At the start of second quarter of 2023, we firmly believe that silver has everything that it needs to stage a secular breakout still in 2023, maybe even short term. Rogers observes that Saudi Arabia is shifting towards trade with China, which signals a broader move away from the US dollar. Analysts say that as the U.S. rivalry with China and Russia intensifies in an increasingly polarized world, Saudi Arabia and other Middle Eastern nations are choosing to diversify their global partnerships. But while states like Saudi Arabia may be getting closer to China, Beijing is far from becoming a U.S. rival in the region, they say. Some 59% of official foreign exchange reserves were held in dollars in the first quarter of this year as well, according to the International Monetary Fund. That's down from over 70% in 2000, but well above the figures for the Chinese renminbi, which represented just 2.5% of foreign exchange reserves. Now, we are presenting you the glimpse of JimRogers' insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Buying silver or gold today, it would be silver rather than gold, although I own both. I'll buy more of both before it's over. But yes, by all means, buy the real stuff, buy the mine if you know the right mine. There are many ways to play. You brought up the pound. The pound sterling used to be the world's main currency, as you know, and it lost that status over a few years, decades, in fact. And most people don't even know now that pound sterling was once primary. And there were throughout history, there have been other major world currencies as well, all of which lost their status eventually. I hate to say it, but the U.S. dollar has had a long run as the world's reserve currency is starting to change. Fundamental reasons, the U.S. is the largest debtor nation in world history now, and debt going up every day. But also, for political reasons, the world's reserve currency is supposed to be neutral. Anybody can use it for anything they want, no questions asked.
Yeah.
But now, if Washington gets angry at you, they cut you off. They say, you cannot use the dollar or we will confiscate it or whatever. So many people, including America's friends, are starting to say, wait a minute. That's not the way the game is supposed to be. So many people are now looking for something to compete with or replace the U.S. dollar. I don't know what it's going to be yet, Francis. And if you know, please do not announce it today. Send me a private email because I am looking to see what's going to be the new competitor for the dollar. It should be the Chinese currency, but the renminbi is still a blocked currency. I mean, it's not freely tradable, so that makes it impossible at the moment anyway. So it's something, the world is changing dramatically, just as it did when the pound sterling started losing its status. And I don't like saying this. I'm an American, my kids are Americans, but I can see what's happening. And many people, friends and enemies, are looking for something to replace or at least compete with the U.S. dollar. The world is looking for something to compete with the dollar, as I said before, our friends as well as our enemies. The Saudis are trading a lot with the Chinese now, and all the Middle Easterners are doing a lot more with China now. China's all over Africa. I have many, many friends in Africa. So the world is changing, and it's not helping the future of the U.S. dollar. So everything that you and I know means the world will continue to change. I don't know yet what's going to compete with the dollar, but I know something will. Excuse me, whether it's the renminbi or not, I don't know. But yes, the Saudis, I mean, the changes that are taking place in Saudi Arabia are staggering. If the people around in the 50s or 70s even were still alive in Saudi Arabia, they would have a revolution themselves because the changes are so dramatic. So the world is changing, and you need to learn. Everybody needs to learn that. And Saudi reserves, by the way, they don't have the gigantic reserves comparatively they had a few decades ago.
Yeah.
So, yes, find yourself some good reserves of oil, and you'll make a lot of money.
During the interview, JimRogers anticipated a significant rise in interest rates, citing high rates seen back in 1980. Inflation has a powerful influence over precious metals, often pushing the price of gold and silver up. Gold prices rose on Monday, supported by a sharp retreat in the dollar as investors look forward to U.S. inflation data that could sway the Federal Reserve to raise interest rates later in the year. Meanwhile, Rogers showed deep concerns about the United States' status as the largest debtor nation, leading to an unavoidable crisis. The national debt has surged by over 89% since the start of the pandemic. The U.S. national debt is sitting at nearly $33 trillion. Regarding ETFs, Rogers pointed out an opportunity for investors to profit when interest rates rise and debt declines. Gold ETFs provide liquidity and transparency by tracking the price of physical gold, enabling investors to trade them at any time during market hours. Let's get back to the interview.
In my mind, anyway, very little question that interest rates are going to have to go much higher. As you're not old enough to remember, but in 1980, when the last time we had inflation, short-term interest rates in the U.S. Treasury bills were yielding 21%. That's not a typo. Treasury bills were yielding 21% because things got so bad and so out of control.
Yeah.
Well, inflation is worse this time, or at least the situation is worse, if you ask me, because of the money printing and the debt. In 1980, the U.S. was still a creditor nation. Now we're the largest debtor nation in world history. So, of course, interest rates will have to go much, much higher in the U.S. before this is over to solve the problem. I mean, these guys in Washington have been nuts. They have printed staggering amounts of money. They have run up gigantic debts. So, of course, you're right, Francis. Interest rates will have to go much, much higher. Again, we've turned that 40-year cycle around, if you ask me. And maybe not today, maybe not this month, but interest rates will be much higher before this is over. And if the U.S. dollar is still, the lead currency, which is changing. The States is the largest debtor nation in the history of the world. That's getting worse every day. This has never been good. Whenever we've had huge debts, especially worldwide, it's led to a problem and a crisis. Maybe this time it's different, Francis. Maybe everything is okay now. Maybe the more debt, the better. Hooray. That's what Washington will tell you. Don't worry about the debt. Don't worry about all this. Well, I've read enough history, or I'm old-fashioned enough or crazy enough to know that gigantic debt, which is increasing all over the world, eventually is going to lead to a very serious problem, whether we like it or not. I've frequently been short debt in the past. I'm not at the moment, maybe because I'm lazy. Well, that takes a lot of work. But no, if you can short long-term bonds, especially in the U.S., where bonds are the highest they've been in history, and other countries too, but especially the U.S., since it's a big market. And there are ETFs that you can use. They're reverse ETFs. I mean, you can buy these things, and if debt goes down, if interest rates go up, you make money.
Yeah.
There are many ways to do it. Or just sell short the bonds. I am not at the moment because I'm lazy, but it's certainly, in fact, you probably have pushed me over the edge. I'll do a little more homework and maybe go short the bond market shortly.
It did
I would just say, Francis, I'd much rather be short than long bonds anywhere in the world.
With the US dollar weakening and inflation expectations rising, the silver market future shows potential for a breakout in 2023. The general consensus among analysts is that silver could hit $30 per ounce this year and from there could jump higher quite quickly, as has happened in the past. Some forecasts suggest a range of $30 to $50 per ounce as a result. Will silver and other commodities indeed stage a strong comeback at the end of 2023? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more exciting topics. Thank you for watching.